Welcome back to Luma's latest edition of the Market Report. I'm Connor McKenna, Director at Luma, and today we're going to break down some of the 10-year historical trends we've seen in valuations across AdTech and MarTech. Before we do that, just as a reminder, remember you can go to our website, lumapartners.com, or click the link below to download the full market report that covers all the data in AdTech, MarTech, and digital content across M&A, capital markets, and private financings. Let's dig in. So, over the last year, if you've been listening to financial analysts and pundits in the tech and SaaS ecosystems, you've heard a lot of commentary about valuations reverting back to historical norms. And we've certainly been seeing this, hearing it, and even feeling it at Luma. So we decided to take a look back at the AdTech and MarTech ecosystems to see how they shape up against that commentary. Are we back at historical norms? Is something different, and what's going on there? So as you'll see on the screen here and in our market report that's published today, if you look back, there's been some wild swings over the last few years, but certainly the valuations seem to be coming back to historical norms for both AdTech and MarTech. But there's big differences in the nuances between these two cohorts or these two subsectors. In marketing tech, this is much more pure SaaS businesses. And so very similar to other SaaS businesses, they've been trading at around 5 to 10 times revenue multiples for years. And that is mostly driven by the inherent predictability and operating leverage that those businesses have, with growth being the big driver as to whether they can ascertain higher multiples, closer to the 10x time revenue versus more in the 5 to 6. Now, if you look at AdTech, it's a much more nuanced story. In fact, if you look at the chart here, you'll see that while AdTech and MarTech are very close today, there was a long period between 2013 through 2018 that they traded at considerable different valuations. And so we wanted to dig in a little bit as to what's happening there today. So let's take this back to 2013, 2014, when really AdTech companies came back to the public markets. You had companies like Millennial Media, Tremor Video, and Yumi start to go public around that time. And while initially they were trading similar to tech SaaS businesses, they quickly fell off because they truly weren't. They were IO-based media arbitrage businesses that did not have the predictability or the operating leverage to trade like those platforms. That said, later in 2014, you did start to have companies like the Rubicon Project that is a true programmatic platform come out, and yet they got muddied together with the rest. So at that time, in early 2014, we actually put out an analysis called Color by Numbers that tried to highlight the differences here between the media arbitrage IO businesses and the programmatic platforms that should be valued closer to true SaaS businesses. That said, the public markets really struggled to capture this nuance, though you did see a lot of this take place in M&A as more programmatic platforms did trade at higher multiples. Then you had this long period here, and where AdTech was trading at a huge discount to marketing tech, and it actually got worse as you had companies like Rocket Fuel and MaxPoint also come into the sector. It wasn't until 2017 where we started to see a huge change in the market. So finally, in 2017, we had what we've been hoping for a long time, and by the end of the year, a clean public AdTech cohort that no longer had those media arbitrage businesses. At the time, we deemed it the great AdTech cleanup, and that is all of those platforms were taken out of the public markets over that couple-year period, whether it's through strategic sales or capitulation trades. By the end of 2017, they were all gone, and we were left with a clean cohort of true platforms that had growth, operating leverage, and predictability to be able to be valued more similar to SaaS. And while we were hopeful at the time that this would occur, it looks, as you look at the chart, by 2018, 2019, this fully came to fruition as the AdTech cohort continued to trade up. Then we had the craziness of 2020 and 2021 with COVID and tons of companies entering the public markets at extreme valuations. And while those valuations have dropped considerably, what we've seen during this time is that AdTech has continued to maintain parity with the marketing technology and SaaS ecosystem. And so as they've come down, they're now at parity to the overarching long-term trend of SaaS, but are not reverting back to the long-term trend of AdTech, which is about 1x revenue. And so it's a much stronger basis for these platforms to be at because they've got the growth, predictability, and operating leverage to have very strong financial profiles and be very strong public companies. Oh, and one more thing. About all of those public companies, well, we think there's actually going to be a case that many of these are going to start to consolidate and move off the public markets again. That is, if you look at the trading history here, we are still at this huge gap between 52-week highs and where people are currently trading. And so there's almost no notion of being able to do many take-private transactions in the AdTech and MarTech space today. But if you play this out, it really was last November when the really sharp decline started across the entire tech ecosystem. And that means starting November and every month subsequently, you're going to have that 52-week high to current trading levels get closer and closer together. And therefore, there's an opportunity for rampant M&A and consolidation in the public markets across the broader tech ecosystem, but in particular, AdTech and MarTech. And we'll be waiting here to work on those transactions as they come in. So that's it for our market report. As always, remember to click the link below or go to our website, lumapartners.com, to download the full report. And we'll see you next time.